Now, to analyse some of the movers from this first week of the profit reporting season, let's bring in here Junbei Liu from Tribeca Investment Partners. Junbei, always great to chat to you on the program here. There's a host of big company profits out there today. There was Northern Star, the gold miner, CIMIC, the builder and engineer, Downer EDI as well. So really, we're seeing a real snapshot of Australia's economy.
Absolutely. Look, at what's actually most important is actually we saw from the NAB today, and the result was actually better than expected. We saw the share price went up significantly higher for such a large company, up more than 4%, 4.5%. Look, the NAB has reported, look, that despite strong competition in some of the housing market, but still it held its margin very strong. Again, reiterate what CBA has talked about in terms of the leverage to the higher interest rate further down the track. So, you see the banking system is getting a bit of boost. Look, you must say the CIMIC and Downer both a little bit down today. Look, both of them have cited that, there's a disruption to labour shortages, and it is incredibly difficult and challenging environment for these type of businesses, even though the demand environment is very good, but they just can't get enough people to supply that kind of demand. And Downer, in fact, has withdrawn, step back from guidance. They just said, look, things going to get tougher in the second half. Before it gets better, perhaps in 6 months' time. So both share price down quite a bit. CIMIC, sadly, that the cash profit is not great, and continue to disappoint investors on that front.
So I know you followed the Nuix story for quite a long time. The shares were very strong today after ASIC gave its accounts and also its prospectus a relatively clean bill of health. But of course, the shares are down more than 80% over the past 12 months. Just what have you made of the latest developments and even this share price bounce today?
Look, I must say there was a little bit more enthusiasm at the beginning of the day. Share price was up close to 10%. Look, ASIC, removal of ASIC risk of further investigating them was just one of the hurdles. There's a lot more other things or other legal cases to come. So it is a relief rally. But for this company, the problem is not over yet. The new management is still getting a grip of what's happening with the company. We do rate the new management very highly, but look, the share price will struggle over the next 6 months as it sorts through its previous issues.
And Junbei, I mean, the market had been going down. Tech stocks in particular, they've rebounded in the United States. That's picked up our sector here. It's just really interesting to note that a week on from when really people were worried about interest rate rises, worried about profit outcomes, now that we're starting to see those profit outcomes, the market seems a lot more relaxed, and we're seeing some pretty good sort of performances on the stock market off the back of these results.
Yeah, that's right. It's a really good point, actually. See, this is all about expectations. In the last few weeks, the market was repricing this higher interest rate expectations. Now that's done. So whatever the sell-off, it's already done. So it's all about earnings in this reporting season. So if you deliver good earnings, like the things like Megaport with good expectations going to next year, and so share price will continue to outperform. So, today we're actually seeing the beginning of it. The investors sort of, coming back to buy those tech companies that were sort of unfairly sold off.
The one group that you mentioned earlier were the banks. And I mean, had you and I been talking this time last week about the banks and saying their margins have been squeezed, they're basically eating each other's lunch, trying to get mortgages, and that really is taking away their profit margins. Yet every one of the banks that's reported these slimmer margins, in other words, tighter times, we've seen the share price rise. And partly that's because of the expectation of interest rate rises. And if that occurs, they're going to end up making more money.
You're so right. Isn't a crazy thing about the share market that, it's not about the current earnings. Yes, the margin's under pressure, but look, in 6 months' time, things will all be good. Look, the bank's earnings will be very sensitive to the future rising interest rate because they make more margin out of it. So investors are trading on hope. But to note, in the last couple of days, computer share price has increased significantly. For that one, that is increasingly, incredibly leveraged to it. For something like 1% rise in interest rate, the earning will be up 50%. So using its share price has gone to all-time highs. So look, there's a lot of companies in the market that's leveraged to that, and they're all rallying together very, very strongly.
And just very quickly, tonight you're going to see overnight the latest consumer price index, the inflation numbers coming out of the United States. That clearly could be at a 40-year high, 50-year high, and will set the tone for markets certainly over the next few days.
Well, absolutely. But look, don't be 100% sure yet, because remember, we did have Omicron shock latter part of last year. So there is a chance, though a slim chance, that this consumer number may not be as good as it hoped. Then, in a way, that it could be disappointment, which in a way we could see a bit of, a bit of reversal of what's been going on. So, but all in all, over the next 12 months, inflation is going to go higher. But look, it's because of disruption, because of border closure. At some point, we'll see that normalize.